Hey everybody, welcome to the latest of Technical Tuesdays. This month I sat down with my friend Rayner Teo. Rayner is an independent swing and position trader and founder of Trading with Rayner. In this post, Rayner and I discuss his process for determining support and resistance levels. He shares with us his edge using support and resistance, how he uses an ATR to determine stops, and explains his process for trailing stops. Rayner gives us two recent trade examples, one in silver and one in the euro pound. Now, before you listen to the interview with Rayner, I want to mention the technical analysis guide done by RJO Futures. I have it downloaded on my desktop, and it's a great resource for the basics of technical analysis. So if you're interested in learning more about the basics of technical analysis, or if you're like me and you like having a solid resource on the basics, I highly recommend you download this free PDF located on our blog in today's post. So without further ado, let me take you right to the interview with Rayner. Rayner, what's your favorite technical analysis tool?
I wouldn't really say there's a favorite, but the ones that I find it the most useful is support and resistance, because those, at a quick glance, right, it gives me a straight heads up to know which are the important levels on the chart that I should be pay attention to and where I could possibly, trade from.
So they may not be your favorite technical analysis tool, but you gave us a couple reasons as to why they're very useful to you. Can you give us a little bit more as to why you feel they're the most useful of all the tools you use?
Okay, because when I have support and resistance on my chart, I could just have my stops. Let's say I want to trade the reversal of it, right? I can have my stops just beyond this market structure, which kind of act as a barrier for the price to have difficulty going through. So that kind of, have the odds in my favor that, if the level does have, buying pressure stepping in, right? My stops could just be away from this market structure, which is support and resistance, right? And that kind of, makes the price, right, have difficulty going for my stops. Not that it's not possible, but I have this so-called barrier that's in my favor to hold up the price to, to kind of, have it to move in my direction.
Okay, support and resistance levels can be very subjective. So walk us through your process in determining support and resistance and what time frame charts you're using.
Okay, so when I determine support resistance level, firstly, I would look at from a daily time frame, since that is the primary time frame that I get my buyers from. So what I'll do is I'm on TradingView. So usually I open up the charts on TradingView. I set it to the default mode, and I like to zoom out my charts. So if you ask me how much do I zoom out, I would say about let me just go through my charts now. About 1, 2, 3, 4, 5, 6, about 10 times on the default chart. So you would have about, on average, I would say anywhere from 300 bars on a chart on the zoom out version. So once I zoom out, right, I would then start to draw my levels and see which levels are the most apparent to me, which one kind of stick out straight in my face. All right, once I identified those obvious levels, I just mark it out, and that's pretty much it, right? I just zoom out my charts and mark out the most obvious levels on my chart, and those are likely the levels that I'll pay attention to, right, to decide whether I want to trade from it, fade the move, or trade the breakout.
So your approach to determining your support and resistance levels is very discretionary. And just like you said, you'll zoom in on the daily chart, and whatever pops out to you as support and resistance, those are the levels that you'll choose to use. But I'm curious, even though it's a discretionary approach, do you have a consistent way you go about determining your support and resistance levels?
Yes, usually when I draw a level, it has to be tested quite a number of times to have any significance. So usually I would adjust my level to kind of curve fit it onto the chart where I get as many touches as possible, whether the touch could be in the form of a body candle, whether it could be in the form of a wick, right? Those are really the key thing that I look for to try to get my level to have as many touches on the charts as possible. So usually those that, let's say, has multiple touch, from, breakout of resistance becomes support, and blast off and never come back for a long time, and that level hasn't been tested, right? That is the type of level that I would pay attention to, right? The type of levels that, the price has not come back or retest in a while.
After you look at your daily charts, are you using any other time frames to confirm those support and resistance levels?
Yes, I typically, once I have it on the daily time frame, then I would go down to the lower time frame to decide whether am I going to trade the reversal of the level or whether do I want to trade the breakout of the level.
How do you feel you have an edge using support and resistance levels?
Okay, that's a good one. So support and resistance level is where many traders they would look to also trade off it. So for example, traders would like to short at resistance. So for example, price comes into resistance and they go short. So for me, I won't just go short immediately. I would typically watch how the price reacts at the level. So if for example price is at resistance, it's building up, it's holding up. I know traders they are piling on their shorts. So what happens is that as more traders are short at resistance, right, the buy stop order will kind of accumulate just above the highs of resistance. So if I look at the charts, right, and it's telling me that, hey, the price is now gaining strength, it might break out, I might take the opposite side of the trade, looking to trade the breakout instead of the reversal. So thereby, profiting from the traders who are shorting the markets, whereas I'm going on the opposite direction, which is, going long on the breakout. So that's one way to look at it, how I profit from, traders who are actually, shorting the resistance.
Okay, can you walk us through a trade entry example using support and resistance? It could be an older trade or a trade that you're currently eyeing.
Okay, sure. So what I'm looking at right now is, for example, the euro pound. Okay, I have a level which is about the 87 cents that's being marked right now on the daily time frame. So zooming down on the lower time frame, right, you can see that on the 4-hour time frame, okay, right now the price, right, is showing some price rejection at around the 87 cent. So a very simple entry for me is that I could just simply, a simple entry trigger is just to have a trend line connecting the lows, right, the swing lows of this retracement. And once I have a decisive strong break and close below the trend line, that would be a valid entry trigger for me to go short, and I would have my stop loss just above the swing high. I would say about 1 ATR away from the swing high, above it, right, and to see whether I can ride the next move down lower. So in other words, now this 87 cents, right, I'm hoping that it would be previous support now acting as resistance. So my stop loss is just beyond this market structure somewhere. If you want to just give you a figure right now, let me just pull out the ATR indicator since I'm on my charts. So the ATR now is about 25 cents. So it will be about 87.36, 87.40, right? That would be my stop loss level for this particular potential trading setup.
You just mentioned using the ATR to help you determine your stop. Is that what you consistently use, or do you use other indicators depending on the trade setup?
Oh, I use it on a regular basis. Basically, it just helps me to determine how much buffer do I want to put my stops beyond the market structure. Because I don't like to put my stops just above the highs or below the lows, because I find that the market has a tendency to reach for these levels and then reverse back in the opposite direction. So I kind of give it some buffer, and the buffer that I use to measure objectively is just simply 1 ATR.
When you're referring to using 1 ATR, are you using the standard settings for that, or do you modify your settings?
Yeah, I just use a 20-period ATR simple moving average. Not that it's going to make much of a difference, but that has been the settings that I've been using for a while now.
All right, I've got a great sense as to how you're getting in, determining your stop, but not sure about how you're determining your targets. How do you determine those?
Okay, so for me, I like to ride, for this type of trade, I like to just ride one swing down, the move down lower. So for example, right, that setup, right, was actually being identified on the 4-hour time frame. So what I like to do is just to look at a daily time frame, okay, and I'm looking just to capture one swing. So what I'm going to do is I'm going to just trail my stop loss down lower. So let's say if I do get it right, the market does head down lower, the new daily candle would form a new so-called lower high because the market heads down lower. So I'm just going to be trailing my stops, right, until the market breaks and close above the prior day high. If it does, right, I'm out of the trade. But if it just continues to swing down lower, I'll just trail the stop down lower and see how far that swing would go.
Great stuff so far today, Rayner. I really appreciate you sharing all of this with us. I believe everybody has gotten a really good sense as to how you're using support and resistance levels for your entries, how you're using ATRs to help you with your stops, and how you're trailing stops to help you close out trades. To wrap things up today, can you just walk us through a trade that you recently did from beginning to end? How did you get in, determine your stop, and then how that trade eventually got closed out?
Yeah, sure. We can talk about silver, right? Similar concept for silver. So let me just find a chart of silver. So that's one of the recent trade I took. So if you look at silver again, daily time frame, I have my levels right plot down. Okay, this is the spot silver. I mean, this is the XAG against the USD, right? So it's like the CFD for silver. It might be different for futures price, but for the price level I'm looking at right now, it's about $15.50. That's a level where previous support become resistance. So the price actually, on the daily time frame, sometime between 4th of Jan till 17th of Jan, you notice that on the chart there is a volatility contraction on the chart, right? You notice that the range of this market is getting tighter and tighter. So where I got short on this was actually on the 4-hour time frame. If you look at it, so you see lower highs coming into support, which is actually the $15.50 level. And where I got short is just simply the breakdown of this. For those of you who trade chart patterns, is what you'll call a descending triangle. So a break and close below that level is where I got short. Again, the trailing stop loss is the same thing, right? Previous day high, and for this trade on the 23rd of Jan, the price break and close above the prior day high, and that's my exit for me.
Thank you, Rayner. Where could people find you on Twitter, and give us a website to check out?
Sure. On my Twitter handle is Rayner_Teo, and the website would be tradingwithrayner.com.
Rayner, thank you so much for joining me on Technical Tuesdays.
My pleasure, Anthony.
Thanks for tuning in for Technical Tuesdays. Remember, if you're interested in learning more about the basics of technical analysis, or a veteran like myself who likes to have a basic technical analysis guide for referencing, please download the free technical analysis guide on our website under this Technical Tuesday post. Cheers, everybody.